On March 9, 2020, Warren Buffett lost $23 billion in a single day. That's more money than most people will earn in 1,000 lifetimes. The entire stock market crashed 7.6%. It was one of the worst days since 2008. Panic was everywhere. But here's the shocking part. Warren Buffett did not panic. He didn't sell a single share. In fact, he did the opposite. While everyone else was panicking and selling, Buffett started buying. He saw opportunity where others saw disaster. In this video, I'm going to show you why Warren Buffett didn't panic that day and how you can learn to think the same way. Let me take you back to March 9th, 2020. The COVID-19 pandemic was spreading. Fear was everywhere. The stock market had its worst day since 2008. The Dow Jones fell 2,013 points. That's a 7.6% drop. The S&P 500 fell 7.6% as well. It was brutal. Warren Buffett's company, Berkshire Hathaway, owned billions in stocks. That day, his portfolio lost $23 billion in value. Most investors panicked. They sold their stocks at the worst possible time. They locked in their losses. But Warren Buffett did something different. He started buying. He bought more shares of Apple, Bank of America, and other companies he loved. The market recovered. By the end of 2020, the S&P 500 was up. Buffett's $23 billion loss turned into billions in gains. He made a fortune by staying calm. How did Warren Buffett stay calm while losing $23 billion in one day? It wasn't luck. It was a mindset. Buffett bought his first stock at age 11. He's seen over 50 market crashes. He knows that markets always recover. Every crash in history has recovered. The market went down in 2008. It came back. It went down in 2000. It came back. 1987. 1973. Every single time. Buffett's most famous quote, "Be fearful when others are greedy. Be greedy when others are fearful." On March 9th, 2020, everyone was fearful. So Buffett was greedy. Buffett doesn't care about one day. He doesn't even care about 1 year. He thinks in decades. A $23 billion loss in one day doesn't matter if you're holding for 20 years. Another reason Buffett didn't panic, he doesn't invest with borrowed money. He has cash reserves. He doesn't need to sell when the market drops. Warren Buffett learned from Benjamin Graham. The market is a voting machine in the short term, but a weighing machine in the long term. Price is what you pay. Value is what you get. In the short term, price can go down even when value stays the same. That's an opportunity, not a problem. Buffett sees a market crash as a sale. If you love a stock at $100, you should love it even more at $80. It's on sale. There's an old saying on Wall Street. By when there's blood in the streets, when everyone is panicking, that's when the best opportunities appear. Buffett doesn't buy risky companies. He buys quality companies with strong moats. Apple, Coca-Cola, American Express, these companies aren't going to zero. When Buffett buys a stock, he asks one question. Will this company be stronger in 10 years? If yes, a crash doesn't matter. Buffett always keeps a large cash reserve. He doesn't invest every dollar. When the market crashes, he has cash ready to buy. The real secret isn't about stock picking. It's about emotional control. Buffett has mastered the art of staying calm when everyone else is losing their minds. Mistake 1. Checking stock prices every minute. The market goes up and down every day. If you watch it constantly, you'll drive yourself crazy. Mistake 2. Panic selling. When the market drops, most investors sell. They lock in their losses. They miss the recovery. Mistake 3. Trying to time the market. No one knows when the bottom is. Not even Warren Buffett. You can't predict crashes. Mistake 4. Giving up after a loss. Some people sell everything and never come back. They miss the next 10 years of growth. Mistake 5. Betting on risky stuff, meme stocks, crypto, penny stocks. When the market crashes, these can go to zero. Buffett sticks with quality. Mistake 6. No cash reserves. If you need to sell during a crash because you need the money, you're forced to take losses. Buffett always has cash ready. So how can you think like Warren Buffett? Here are 5 simple rules you can follow starting today. Rule 1. Think in years, not days. Ask yourself, where will this stock be in 10 years? If you can't answer that, don't buy it. Rule 2. See crashes as sales. When the market drops, don't panic. Ask yourself, is this company still strong? If yes, buy more. Rule 3. Stop checking prices every day. You don't need to know what the market did today. You need to know what it will do over 20 years. Rule 4. Always have cash reserves. Don't invest every dollar. Keep 6 to 12 months of expenses in cash. When the market crashes, you'll have money to buy. Rule 5. Keep learning. Buffett reads 500 pages a day. Read books about investing. Learn from the best. Knowledge is what keeps you calm. Let's recap. Warren Buffett lost $23 billion in one day. He didn't panic, he bought more. He saw a sale. He thinks in decades, he keeps cash ready. Here's your action plan. Stop checking prices daily. Keep cash reserves. Buy quality companies. Hold for years, and when the market crashes, don't panic. Buy more. Imagine looking back in 20 years. The crashes you survived, the times you stayed calm. The money you made by not panicking, your future self will thank you. If this video helped you, please hit that like button. Subscribe to Money Mint for more investing tips. I'm Mr. Mint, and I'll see you in the next video. Remember, be greedy when others are fearful. Stay calm. Think long term. You've got this.